Welcome to the special focus of OK Zimbabwe Limited. Today we are joined by the company's Chief Executive Officer, Willard Zireva, who will be sharing his vision for the company's growth and revival. Stay tuned. So, thank you, Mr. Willard Zireva, for granting us this opportunity to speak and discuss with you. You just started journey with OK Zimbabwe, or maybe let me rather say your continuation, as it is episode 2 with OK Zimbabwe. From 2001, when you ascend to the helm of the company, your journey faced turbulent times, from land redistribution program, which affected agriculture, to the financial crisis of 2007 to 2008, leading to hyperinflation. Yet, you steered through OK Zimbabwe to become the largest retailer by 2017, despite these challenges. And 8 years later, you have bounced back to lead OK Zimbabwe in a time when it is also facing a confluence of calamities, including debt stress, constrained supplier relations. But with your qualities and experience from the past, the market and investors alike are watching OK Zimbabwe with renewed optimism. So can you walk us through your turnaround strategy? How are you planning to turn around the fortunes of OK Zimbabwe?
Blessing, thank you very much. I think we need to just go back slightly and say, if we compare 2008 and 2025, for me, there's quite a difference. In 2008, the whole economy basically collapsed. In 2025, you have pockets of difficulty happening across the economy, but in general, the economy is still functioning. So come 2025, we were then approached by the board and asked to come back and try and take the company out of its problems, which we could see from outside. And so we accepted to come in just over 6 months ago. And when we walked in, we found a company saddled with debt, disillusioned staff, no product supply in the stores, or very little. And this was a really desperate situation. So our first inclination then was to say, where do we start? And we looked at the reality on the ground, and we said, well, we have got to bring liquidity into the company, because without liquidity, we had nowhere to start. And what does that entail? It entailed us going to the shareholders to say, your company needs an injection, and this injection is necessary so that we can work with trying to reduce the debt which was settling the company. And shareholders obviously needed to see what it will all translate to. And that's where we started. And from there, we had conversations at the same time with the suppliers to say, please come back and support us. So that's how we started our recall Blessing.
So it means that the 20 million fully subscribed rights offer will give prominence to inventory restocking and debt repayment.
Yes. Basically what we've said is let's deal with the settling part of the debt, because our suppliers were unhappy, and rightly so, because they were owed money for going back as long as 6 months for some of them. And so the debt, the equity raising of 20 million was to start dealing with reducing that indebtedness. And as well as opening opportunities for us to get more product into the stores, because we needed to get that stocking right.
Okay, so building on the foundation of stabilization, let's explore the pillars of your turnaround strategies and how are they going to build on OK Zimbabwe's 8-year legacy to ensure sustainable recovery.
Blessing, one of the most fundamental things is to ensure that a good corporate governance is in place in the company. And the importance of that is we do things according to the book. And in that way, we rebuild, as part of that, relationships with suppliers, embark on strict cost control and cash management, and retrain staff so that we instill a positive culture in the organization, as well as assess and realign all the operations of the company.
Now, turning to trust, which is a critical element of your recovery strategies, let's discuss credibility. OK Zimbabwe has faced credibility and confidence deficit in the past owing to huge debt and constrained supplier relations. How are you going to rebuild that confidence, especially within the consumers? You know, OK Zimbabwe is where the nation shops.
Yes. I think what the most important thing to understand is credibility builds trust. And without credibility, you cannot have trust. But trust only sets in over time. So it's not an event, it's a process. And we have to start building that trust. And the trust is not only with the customers, but the whole market. And I'm talking about all stakeholders, from the authorities, the shareholders, the suppliers, the customer, who is the most important for us in terms of getting the business back. So we need to get trust restored in the organization, which is absolutely critical. And that trust is going to be built by us walking the talk. Not just mentioning that we are going to build trust, but doing it in a way where people can see we mean what we say. So that's what we are going to be doing.
That's very inspiring. Let's shift to broader economic context. Zimbabwe rebased its GDP to 44.4 billion, and the economy is projected to grow by 6% this year. Now, have you seen or observed any changes in consumer spending patterns or sales volumes as of yet, as economic growth basically manifests in people's pockets? When the economy grows, people spend more.
Blessing, turning around a company is a process, and it's not an event. So we came into a collapsed business. Basically, I don't think it was going to be around beyond another month. So you are now starting from that base. And what is happening in the economy obviously affects the performances. So one would expect the first thing we had to do was to bring in product, which was not available when we came in. And what then happened is customers had naturally walked away. So we are now working on building and bringing in more stock, and in the process trying to say to the customer, come back, come and see what we have got. The company is back, and we need your support. So that's where we are starting from. So to talk about aligning with GDP growth is probably too early. So it will come through as we go forward.
Okay, on the topic of policy changes, let's examine pricing flexibility. The government has repealed Statutory Instrument 81A, giving commerce and business the ability to price or to index prices above the formal market rate, which is mostly overvalued. Have you started seeing the benefits of this policy adjustment?
Certainly blessing, because as we came in, it was fortuitous that within, I think, 2 weeks of us coming in, the Reserve Bank relaxed the controls on pricing. And what that does is to give us an opportunity to operate as best as we can. It gives us an opportunity to be competitive. We now can compete with the informal sector. Our pricing is flexible. We can price in either of the two currencies and accept customers to pay in either of those two currencies. And that is important because we are now not discriminating or leaving anybody out in that process. So yes, very positive.
So can we basically say now, OK, Zimbabwe has no problem with its revenue tilting more on ZiG than USD? As we have seen in the first quarter, the company was saying our revenue is tilting more on ZiG, not the United States dollars, and we are having challenges in repaying suppliers. Are you comfortable now?
We actually, it has tilted more towards the USD. We now have more USD and less ZiG than we would want to have. So it's a completely different shift. We now face a situation where we are short of ZiG. And there are some creditors who say they only can be paid in ZiG. And we are not generating enough ZiG, but USD. So it's a very different situation now. And that's what open market policies do. They bring things to balance on their own.
So let's move to regulatory challenges and the ease of doing business. Operating a retail store in Zimbabwe requires over 25 licenses, some with bureaucratic challenges, positioning Zimbabwe number 140 over 190 rankings in ease of doing business. But fortunately, the Ministry of Finance and Economic Development promised to streamline regulatory processes in the budget. Have you observed some changes as of yet with regards to this licensing burden?
Blessing, actually, the licenses we have to deal with are over 30 in our business. Yes.
I thought there were 27.
No, there I think 31 the last time I checked with our company secretary who deals with all licensing. We are talking about 31. So it's too many licenses you have to comply with in any country. So you get this should be combined in our view and say if you are trading, you have whatever 3-4 licenses and they cover everything. Most of those licenses are coming from quasi-government or government institutions, so they can combine them. However, to answer your question specifically, the Minister of Finance announced this intention to reduce the burden of licenses on business. This was, I think, if I'm not wrong, announced in March and was supposed to be implemented over the next 6 months. However, it is a midterm statement. He then made another announcement which said they will be dealt with by the end of the year. So we hope that that will mean it will be incorporated in the upcoming national budget, 2026 budget. So we are still looking to see what will come out.
So beyond licensing, what other regulatory challenges are you facing as companies? Or?
Well, at the moment, we really are free to operate in most of the things we do. The regulatory environment, yes, is there, but we can deal with it. But you are going to get regulated anyway in any economy, but it has to be within limits. So that's our cry, is to get these regulations to be more streamlined.
Thank you for that. Let's now address the informal retail sector. Zimbabwe's economy is 65% informal, and the real sector is being dominated by tuck shops. So government in the midterm policy and in the 2025 budget, it promised to align the informal sector according to the law, promising to include taxes to bring the informal sector under the tax nets, so as to even the playing field between the formal and the informal players. Have you noted any changes yet? Yes,
we have seen changes. It's government has been enforcing some of their laws, things like controlling borders, how product comes through borders in terms of illegal importation. There's been more enforcement on that side, trying to deal with the fake product, which is ongoing, and streamlining the way the informal sector operates. I think it's important that the informal sector is included as part of the economy in a more regulated manner. So yes, there's been changes. There's been movement in terms of even product and customers moving back more into formal over the last 6 months.
So how are you adapting OK Zimbabwe's operations to compete with the lower priced goods from the informal sector?
We're actually currently competitive. If you look at the prices of similar goods, we sell genuine product. There will be no fake product in our stores because we check everything, and we get checked by the Bureau Veritas in terms of our products coming in. And on the informal market, on the other end, you are going to get fake product. So a customer goes out and makes a choice. You find a almost similar looking product in terms of the pack, but some of those are fake. So, but if you look at a product, similar products, the price differential is basically so small. Most of it is because they don't pay VAT, for instance, and we have to pay VAT.
Yeah, lately there was an influx of fake Mahatma rice in Bahrain. Yeah. Staying with the informal retail, let's explore adaptive strategies. The rise of SMEs and tuck shops reflects a decentralized retail model. Are you exploring partnerships with smaller retailers or adopting smaller format stores, such as South Africa's container store trend?
Yeah, we're certainly looking at the options in terms of how we trade, and store size is critical, store locations is critical. We believe there's room for us to look at smaller size stores, and where there's work taking place right now. And what are we trying to achieve? We are trying to get closer to the customer, and then expecting the customer to have to travel a long distance. So by doing that, you effectively be placing yourselves in the same position where you are competing with the informal sector. So it's a position which we are seriously exploring.
Now let's pivot to digital transformation. OKShopEasy.com is a step towards digital commerce, e-commerce. But with Zimbabwe sales, online sales remaining 5%, it remains a hurdle. What investments are you making for OK Zimbabwe to compete within the digital space?
Well, we have a very robust ERP system. which has got capabilities to bring in more online activities. And as we speak, we've got more, quite a few online activities being tested, and all these are meant to try and grow that the online business. Yes, we are much less than lower than countries like South Africa, but I believe it's an opportunity, especially for those formal businesses which are highly computerized, and in a way it will give us a competitive advantage.
Now, finally, let's look to the future. Looking 5 years ahead, how do you envision OK Zimbabwe's role as a retail in the retail sector, shaped by competition from the informal sector?
I think formal and informal are going to coexist. My view is as more and more enforcement comes through from the authorities, there will be a place for both. And formal will continue evolving. There will be an adaptation. They will be looking at doing things differently, and that in itself will mean there's a future. But every business must look at change and adaptation, because if you don't adapt, you will die. It's a fact of life in terms of business, and OK will have to be looking at adaptation as we go forward.
So in the short term, are we to expect the OK Grand Challenge being back?
Blessing, the OK Grand Challenge, yes, it's an OK product, but no longer ours. It's a national product. So our intention and plans are the Grand Challenge will be back next year. Absolutely. The nation requires it. Everybody requires the Grand Challenge.
Now, given your experience and the qualities that you possess within the retail sector, there is a possibility or a probability that in one time you might become one of the leading ministers within the government. Given that you become the Minister of Industry and Commerce, which policies do you think need to be twisted, not just to support OK Zimbabwe, but the retail economy as a whole?
Blessing, I hope I never become a minister. I think for me, I look at that and say, well, it's a calling which is not in me. I look at myself as working for the nation from a different perspective,
okay.
Not in government. Yeah, policies, there are many policies which have got to be looked at. And when we talk about ease of doing business, I think if you were to talk to majority of businesses, this country, we are still a long way from getting to achieve ease of doing business, because there should be more support coming through from government. There should be more support in terms of bringing in initiatives which facilitate economic growth. At the moment, this economy is a slowdown, and that's fact. It needs to be rejuvenated, and that can only come from policies being driven and by government.
So what's your message to your publics, stakeholders, shareholders, and customers out there?
My message is OK is back, and OK is going to move forward, and that movement can only be achieved by working together with all of you stakeholders. And this is my appeal. Let's work together to re-establish this asset which belongs to the nation.
So, thank you, Mr. Zireva, for such an insightful discussion. Wish you the best in your journey, your second episode with OK Zimbabwe.
Thank you, Blessing. Thank you, listeners.